So I think we'll go ahead and get started. So good afternoon, everyone, and thank you for joining us today to learn all about employee retention credits. I'm Christina Davis, and I manage the NDCP Marketplace program. We also have Adam Mathis from EF Cost Recovery. They have been a partner of ours for a few years now. Primarily, their focus is on work opportunity tax credits. But they now assist with the employee retention credits as well. So Adam is going to explain exactly what employee retention credits are and how they can assist you with the entire process. So Adam, I will turn it over to you.
All right. Thanks a lot, Christina. And thanks for having me today. And hello, everybody out there from the Dunkin world. Just a quick background on EF Cost Recovery. We're a niche cost recovery consulting firm located in southeastern Massachusetts. As Christina alluded to, our core business is the work opportunity tax credit, for which we currently service about 1,500 Dunkin rooftops. And then in addition to that, when other things pop up where we see a need for assistance and our clients come to us for help, we'll put programs and services together, such as with the employee retention tax credit that we're going to talk about here today. So without further delaying things, I know everyone's busy, so we'll get through this thing pretty quickly and then open it up to questions. Kelly, if you want to jump to the first slide. So what is the employee retention tax credit? So the ERC is what I refer to it as, was put in place a year ago, which is hard to believe that we've been living in, the world of COVID for over a year now. It was part of the CARES Act, but it was like the forgotten little brother, because originally the law made it so that you could not use the ERC if you received a PPP loan. And that was changed at the end of December to allow you to do both, as long as you don't have a duplication of benefits, which we'll get into a little bit here on one of the next slides. But so the ERC is a fully refundable payroll tax credit. It's claimed on your quarterly payroll tax filing, so your 941s. That's how you'll claim it. It will have no impact on your income tax or your return. It's really just a refundable payroll tax credit. Who is eligible? So any business owner that retained their workforce and who had either a significant decline in receipts, or if you were subjected to a full or partial shutdown due to government order, you will qualify. And that begins, starting from last March 13th and continues on now. Now you'll see two columns here. And that's because, when Congress, as part of the legislation they passed at the end of December, when they changed the rules to allow you to use the ERC in conjunction with a PPP loan, they also extended the program originally until June 30th of 2021, but then about 4 weeks ago it was extended again to the end of the year. And at the same time, they also changed some of the calculations and some of the qualification criteria. So we kind of have to look at it in two different silos. So starting with 2020, who is eligible? Any business is eligible as long as you meet one of these two criteria. And it's not, you don't have to meet both. That's the important part here. You have to meet one or the other, or maybe potentially both. The first, which what we're seeing is, by far the largest amount of our Dunkin operators that we are helping, their operations were either full or partially suspended. You had your dining rooms were either shut down completely, or you've been operating at reduced capacities for the majority of the last year. And now even in the instances where some states are allowing you to go back to 100% capacity indoor dining, you're still being mandated to meet that 6-foot social distancing guidelines between tables, which is still effectively reducing your capacity inside, which will continue to qualify you as the restaurant owner. Or you had a significant reduction in receipts. Now that reduction has to be compared quarter over quarter in comparison to the same quarter in 2019. So for purposes of 2020, that reduction has to be 50%. For purposes of 2021, that reduction is 20%. One of the big differences that you'll also notice is that in 2020, if you have full-time employees are less than 100, you can count all eligible expenses. If you have over 100 full-time employees, we can only use those eligible expenses that were paid to employees to not perform work. Now, as we get into 2021, that threshold jumps all the way up to 500. It's a big, big difference, okay? And we're talking true full-time employees. We're not talking a full-time equivalent. These are actual full-time employees. How much can you get from the ERC? I think the next slide will dig into that a little bit. Okay, so again, we have to look in two different silos. For 2020, what can you get? You can get up to $5,000 per employee for the year. For 2021, you can receive up to $7,000 per employee per quarter where you're eligible. So again, it's a big, big difference. This is just an example. So, I'm up here and I'm in Southeastern Mass. This is like the Dunkin homeland. So this is a local group. They have 11 restaurants. They're a WOTC client. So when we first approached them to see if we could help them, their initial reaction was, hey, we have over 100 full-time employees. So we dug in, we pulled the payroll records, did the full-time employee calculation. They were actually under 100 full-time employees. So they qualified. We ran this. So this is just their 2020 ERC. This isn't even including their Q1 of 2021. Okay. So they had 265 total employees throughout the 11 stores. They had just shy of $1 million in qualified wage expenses. So their ERC, which we went back and claimed for them via 941X forms, was $493,119. So as you can see, this is quite significant to the bottom line, and you do qualify. So the benefits of working with EF cost recovery and what we can bring to the table. So we're going to evaluate and determine your eligibility for the benefits and the credits pursuant to the COVID acts, determine and calculate the available credits, offer all reporting of the tax credits, including year-end calculations and supporting documentation. And then we work on a success fee of 15%, just to put that out there for everybody. So meaning we charge 15% of what we're able to get you. And then a part of that fee is an additional no-cost audit defense. So if the IRS a couple years down the road decides they're going to put a task force together and go back and look at some of these ERC claims that were made, here at the beginning of 2021 and throughout the year, the IRS is simply just overwhelmed right now. So they can't be looking at these things, but that's not saying they won't look at them down the road. And if they do, we are going to defend that 100% on our dime on your behalf. Okay. The reporting of the tax credits is either handled on like I said, in Form 941X for the prior quarters, or we will work with your payroll company to get these credits included in a timely filed 941. There are also methods to request advanced credits. So in theory, we could request today on a Form 7200 up to 60% of eligible credit based off of some prior year data for this quarter. We could request it right here today. Everything with the IRS right now is backed up. So I just want to put that out there. The best method to do this is to get with us, get with your payroll company, get these things on a timely filed return so that way you can get money in your pocket quickly. A Form 7200 guidance is 2 to 6 weeks. That's from the IRS. We have stuff that we filed in January that still hasn't been processed. So it's likely going to be more like 8 to 10 weeks. So like I said, get with a professional, even if it's not EF cost recovery, to work with your payroll company, get these things incorporated on a timely filed return, if at all possible. The 941X is probably going to be 4 to 6 months for for processing with the IRS. But rest assured that money will come. You are eligible for it. There's no cap on how much monies people can claim through this credit. And the biggest key is you have to be careful not to have a duplication of benefits. So if you have PPP money, you need to be cognizant of not double dipping. Okay, you can't include any of those wages that were paid with PPP funds in the calculation of the ERC. In addition to that, if you are not an EF cost recovery client for WOTC, but you should be using somebody, especially in the Dunkin space, you should be taking advantage of the work opportunity tax credits. So if you do that, we cannot include any wages that you may have already included in a WOTC calculation. Those would have to be backed out, as well as going forward. We'll advise our clients, hey, while you qualify for ERC, shut the WOTC down, okay? Because we can get you 70% of those eligible expenses rather than 25 or 40%, depending on the qualifying WOTC criteria. As well, if you have, any of your stores are taking any of the COVID related, sick leave or family leave credits, those wages need to be backed out of the calculation as well. So there are a number of moving parts that you need to take into account when looking at this thing. And we hope that here at EF Cost Recovery in conjunction with Alliance Cost Containment and the NDCP that we can help you out. That's the end of my spiel. We'll kind of open it up. So if anyone has any questions, please feel free to put it in the Q&A and I'll answer them as quickly as they come in.
I think Mr. Patel has his hand raised. He'd like to ask a question. Let me go ahead. Oh, you may have to unmute yourself. Mr. Patel? If you have a question, why don't we come back to you, but we'll, in the meantime, we did get another one in. Our tips, I mean, I don't know if Dunkin does get tips, would those be included in this calculation?
Yes, any claimed tip wages are eligible in the calculation. Oh, there we go. There's Naresh Patel. Hi, do you file the amended 941 returns for 2020? The answer is yes. We will put those together, produce them, send them to the client for review and signature. When we receive them back, that we filed with the IRS on the client's behalf.
Good question. We got another one. Will this impact my PPP forgiveness?
It will not. So we'll work with you to make sure that, especially for, not all operators qualified for PPP round 2. You might have an operator who has 10 or 11 locations and only 2 or 3 qualified. So what we do is gather that PPP information, look at when you received the money, kind of shut off the ERC ticker at that point, get them their ERC prior to the receipt of the PPP round 2, and then we don't turn that ticker back on until the client tells us that they've expended those funds. Mr. Naresh Patel, does our payroll company need to be engaged on filing the amended, or will this be done directly by you? We will do it ourselves on behalf of the client. Most payroll companies are going to charge you to amend those 941s on top of our services, and our services do include that. So it's just something to keep in mind.
Would this impact eligibility for the Restaurant Revitalization Fund?
It will not, has no impact at all on the Restaurant Revitalization Fund. So if you're planning on pursuing any of those monies, this will have no impact on that. And if you are lucky enough to receive any of those monies, it will have no impact on the calculation of the ERC either. Same with, if you received an EIDL loan, same with, I know some states put state grants out, that will have no impact on the calculation as well. Deadline to file for 2020 and 21. You, like all tax related matters, when you're going back and amending a tax form, you have 3 years to do so. So in theory, 3 years from the date that your 941 was filed. I will also say that there's no geographic restrictions when it comes to the ERC. We have clients all over the United States that we're helping right now from coast to coast. So no matter where you're located geographically, you potentially qualify, and we'd be happy to help. Do you get the funds back, or do you get credit to be used for future payment of payroll? Good question. So on an amended 941, you're actually going to receive refund checks. Okay. On a timely filed 941, if we work with your payroll company to get this thing incorporated in a timely filed 941, you have that choice to elect a refund or to elect it to be applied to future use. We haven't had anybody that's chosen to elect to have the IRS hold on to their money if they didn't have to. So, but it is an option.
Do we have any other questions? Oh, here's more.
Is this restaurants only or any business? Also, the comparison of loss of revenue, is that any quarter? Good questions. So it is not restaurant specific. You could be in any industry and qualify for the ERC, even if the industry that you're in was deemed to be essential. You can still qualify as an essential business. The comparison of revenue loss has to be the same quarter. So when we're looking at it, we have to look at Q2 20 versus Q2 19, Q3 20 versus Q3 19, and so forth. Same for 21. When we were comparing 2021's numbers, we are still comparing that to the same quarter in 19. Okay, so when we look at a business to see if they had that 20% decline in the first quarter of 2021, we're looking at Q1 21 versus Q1 19. I will put my email in the chat if anyone needs it to reach out directly. You can also get it through Christina. Like I said, we're here to help anyone who even just has some questions before they really, just want to dip their toe in the water with a few more questions, can reach out, and I'm happy to help. If PPP was used towards payroll 60%, then only the remaining 40% can be used for ERTC. Correct. So, let's say in theory, PPP round one, you received really early. You got it on April 15th, okay? And for round numbers purposes, you received $100,000. You tried to limit how much payroll you used in your forgiveness application, so you limited that to the minimum of 60%. So from April 15th, however long it took you to use that $60,000 to hit that 60%, you cannot earn any ERC benefit in that time period. Once you use that 60% up, so once that $60,000 was consumed by payroll, even if you're still in your period, we can start calculating the ERC again. I think if there's no other questions, Kelly and Christina, that might wrap it up.
Yeah, and we will definitely, on Tuesdays, weekly fill email, we will actually send out the recording and the presentation so that if anyone would like to review it again or needs to share it with someone else, then you'll have that available. And obviously you'll have Adam's contact information there as well. And if there are any questions, feel free to reach out to either of us. So we thank you all for joining. Thank you, Adam. Thank you, Kelly, for your help.
Thank you
we hope
both.
everyone has a great day.
You as well.
Everyone, take care.
Take care.
Thank you. Bye-bye.